How is everybody doing today? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. Hope everyone's having a wonderful day out there. Today's episode, we're going to talk about a change in federal payments and whether that can lead to what's called real-time banking. So it's kind of rather interesting blog post here from PCBB. So I'm bringing this up right now so everybody can take a look at this. And I'm just going to blow this up a little bit here so that we can get a better look at this. So this is a blog post from PCBB. I do have a link to this attached in the description down below if you'd like to go take a look at it. And this is titled, Faster Federal Payments Mean Rising Demand for Real-Time Banking. The summary reads, as federal payments shift to faster digital methods, banks can support small to medium-sized business clients by modernizing payment tools, encouraging digital adoption, and delivering real-time capabilities that meet evolving business expectations. So I'm going to skip this first little part here because this is kind of a narrative, and I'm going to get down into so government payment shifts may shape banking strategies. So a new executive order from the White House aims to modernize how the federal government makes and receives payments, and it could have wide-reaching implications for the financial services industry. Under the directive, federal agencies are expected to eliminate paper checks and move toward digital payment methods for services like Social Security payments, tax refunds, emergency relief, and vendor payments. The goal is to improve efficiency and reduce fraud. While this policy is focused on federal operations, it signals a broader shift. As consumers grow accustomed to real-time access to government funds, their expectations for all financial services, including payroll, P2P transfers, that's peer-to-peer. So think of like Venmo, PayPal, Cash App, and business payments may rise. For banks, this is more than a back office change in government policy. It's an early signal post that real-time payment capabilities and digital education are fast becoming competitive necessities. So now it gets into this concept of real-time banking. So real-time banking becomes the norm. As digital disbursements become standard, business customers, many of whom still rely heavily on check-based payments, may feel increased pressure to modernize their own payment processes. Banks have an opportunity to support this shift by helping businesses adopt faster, more secure ways to send and receive funds. This not only deepens existing relationships, but also positions the institution as a strategic partner in improving efficiency and cash flow. Increased deposit activity could also follow. As more payments shift to real-time rails, businesses that currently rely on check-based receivables may begin adopting faster digital alternatives. This creates opportunities for banks to capture more frequent deposit activity and strengthen cash management relationships. Institutions equipped to support real-time processing through the FedNow service or similar platforms will be better positioned to help business clients modernize their payment operations and improve working capital efficiency. In this context, digital readiness becomes a growth strategy, offering low-friction onboarding, clear tools for direct deposit, and mobile alerts for payment notifications can strengthen customer relationships and improve financial inclusion. And then it goes into education, tools, and timing. While most customers are familiar with digital banking, some business clients remain reluctant to adopt digital payment methods. This shift in government payment infrastructure presents an ideal opportunity for banks to launch targeted outreach, helping business customers understand the operational benefits of transitioning away from paper checks. By offering education and support, banks can position themselves as strategic partners in modernizing payment workflows. Staff training may be needed to support this shift. Teams should be prepared to explain how real-time deposits work, answer questions about security, and walk customers through product setup and usage. Institutions that lead with service, not just speed, will stand out. While the executive order doesn't mandate FedNow service adoption, it encourages faster processing across the board. Banks should use this time to evaluate their payments infrastructure and determine how real-time capabilities can support not just consumers, but also business clients, from faster receivables to improved cash flow tools. So looking ahead, the modernization of federal payments may seem like a small change, but it reflects a much larger evolution in how people move and expect to access money. For CFIs, it's a clear signal. Real-time banking is quickly becoming a baseline expectation. Banks that act now by building real-time capabilities, educating customers, and strengthening digital tools will be better prepared to compete, grow deposits, and serve their communities as expectations continue to shift. So, fantastic. Fantastic piece. This is very interesting because I don't think this is necessarily wrong. However, I'm going to play the devil's advocate now, and I'm going to take a step back on a few of these things. So, number one, yes, the government is making big adoptions. Yes, the government is trying to become more efficient. Yet, yes, the government is trying to find ways to get money to people quicker. I think at the base of that, like if you have a lot of customers that have a lot of government contracts and generate a lot of revenue, or maybe their sole revenue is from the government, some government agency, those might be clients that you want to target with this right out of the gate if you're making a full push into real-time payments, really trying to upgrade your technology and payment and various payment channels, peer-to-peer, direct payments, etc. But there's a big but here. Consumers are reluctant to change. There's also a lot of issue. Let's just take peer-to-peer, P2P, peer-to-peer payments for a second, okay? So you have three big players in that space. You have Cash App, you have PayPal, we have Venmo, which is owned by PayPal, and you have Zelle, which is basically owned by Early Warning Systems, which is owned by the big banks, JP Morgan, Bank of America, etc. The only real option there for banks is to go with the Zelle, because you're not going to go with PayPal, you're not going to go with Venmo, you're not going to go with Cash App, which is owned by Block. Zelle was basically created by banks for banks. The only problem is Zelle's not cheap. Zelle's not a cheap service to get into. There's a lot of strings attached with that. The big banks, mainly, created it as a system for them, not necessarily for all banks. And yeah, I think you have to kind of understand that a little bit. There's also issues with peer-to-peer. Peer-to-peer is instant payment, meaning that if you make a mistake, that money's gone, and it can be very difficult to get it back once it's out the window, so to speak. And there's other problems. Venmo, Zelle, they've gotten tagged for having a lot of fraud on these systems in recent years, and a lot of fraud that they haven't really done a whole lot to really clean up. Now, regulators have gone after them a little bit and then kind of backed off somewhat. So all I'm trying to say there is that it's not as cut and dry as this blog post would make it sound like. Oh, hey, if you want to do this, you need to make it a competitive advantage, a part of your strategy, and you need to go out and you need to do all this, and it's plug and play. You just go buy a couple things and plug them in, boom, 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 train your employees, and bang, you're up and running. It's not that simple. It's not that simple. It's never that simple. There's a lot of moving parts to this. And now let's talk about FedNow for a second, okay? FedNow could be fantastic. It could be great. Is Fed, and from what I've seen in recent reports, and I'll probably report more on this in more episodes, but I think FedNow is up to maybe about 1,400 banks, experimenting with it. I'll use that word in some way, shape, or form. But is FedNow really ready for prime time? Is FedNow really got everything ready to go? No, I think they're still very much in the early stages of getting Fed. I think they have the rails for FedNow up. But do they have the end-to-end platforms? Do they have the app in place? Do they have the front-facing systems to make that a very user-friendly, easy-to-use interface? And the answer to that is no. That stuff is not there yet. So yes, I mean, so I think the premise here is that should this be on your radar? If you're a bank and you're thinking about your customers and all these different payment channels, should you be thinking about all this? Yes, absolutely. Checks, obviously checks are a huge problem because checks are probably the biggest thing as far as from a fraud perspective. I mean, check fraud is enormous, but the reality is, checks aren't going away. They're not going away. I mean, yes, their usage is down, but people still write billions and billions of checks every year. So checks they're not going away tomorrow. Maybe 10, 15, 20 years, checks will be non-existent, maybe, but they're not going away tomorrow. And I think that basically, as much as some banks would like them to go away, because then that's, hey, you don't have to deal with check fraud and all that after that. But you know what? That fraud will just replace itself with another type of fraud and another type of headache and another payment channel. So sometimes I think you got to be careful what you wish for. But so while I love this in terms of, I like the premise of what this blog is proposing. And yes, I do think that you have to think about this stuff. This stuff needs to be on radar. There's going to be customers that are going to ask for it. At the same time, you got to be careful. There's a lot of pitfalls. None of this stuff it's not as simple as just plug and play and give it to the customer and, oh yeah, we're ready to go. There's a lot more nuance to this. There's a lot of pitfalls here. A lot of this stuff can blow up in your face if you're not very careful with it and you're not really focused on what's going on. But there is a big, this executive order, a big change from the government. It's going to have ripple effects in terms of what banks do with this technology, what customers ask for. So yeah, we'll have to definitely keep this on mind. That's why I wanted to report on it. That's why I wanted to do an episode on it, because I think it's important. And I've covered a number of these different payment channels in other episodes and the live stream, talking about different things from time to time. So this stuff invariably is on the radar. It's very important. This will continue to evolve over the next few years, and we shall see what happens. But that being said, I hope everybody found this episode to be interesting. So I will do my wrap up. Please make sure to like, share, and subscribe, as that really helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I love hearing from everybody. And remember, as always, please check out some of the episodes on the channel. And other than that, I hope everybody has a great day, and I will see everyone out there real soon. Thanks a lot.